Hi there and welcome back to Dukascopy TV. It's time once again for our technical analysis of the week, and joining me is of course Jean-Francois Owczarczak of fingraphs.com and MJT. Welcome back, Jean-Francois.
Hi Sinead.
So let's look at some data coming out this week. We have a couple of PMIs for a few different countries, and then of course the ADP employment data and US NFP out later in the week. So how are these going to affect the markets?
Well, the PMI is going to be interesting because we have a widespread release across all markets, so it's going to help us gauge the prospective health of the various economies. Maybe we'll get a sense if the weaker euro is having an effect in Europe, and also in the US if the stronger US dollars does have a negative impact. The NFP and the ADP will be quite important as last week we had the GDP data coming out in the US. It was a bit on the weak side. So any news out of the US from a macro basis is there to either confirm or infirm the acceleration of growth in the US. So I think all these data are going to make the market quite sensitive over the next week. Now let's have a look at them in the charts. So we're back on our Fingraphs mosaic here. We put a mosaic view on a daily basis, so the perspective over the next few months for the euro dollar, cable, euro Swiss, gold, dollar Swiss, dollar yen, Brent, and the S&P futures. And we'll start with the euro. Last week we were saying that we had reached on a daily and an hourly basis, so the medium term and the short term levels of exaggeration that were quite significant, and that we could expect at least a consolidation, maybe a rebound. So we'll have a look at it in today's perspective. And so if you look at the weekly charts or the long-term chart or the perspective over the next few quarters, it is still heading down. You could see that we are slowly approaching the oversold, but we haven't entered it yet. So there's more potential to the downside over the next few quarters. In terms of targets, we're within the target zone, but we could still extend down to 106 over the next few quarters. And there's a bit more time left to reach those targets. So we would still be negative over the longer term on euro dollar. On the daily basis, we had reached our impulsive 2 targets. These are usually the ones we use for very extended moves, and we had actually gone below them. So a sense of exhaustion here, which is fueling a slight consolidation. We cannot talk about a reversal yet or anything into that's significant because it's still very early stages. So what we'd say here is that we are exhausted pretty much at the levels we are at the moment, and we'll need to see if the short-term frequencies can confirm that we could initiate a bounce. Now, if we look at the hourly, also quite exaggerated, exhaustion, impulsive 2 targets had been done. I'd want to say that the reaction was a bit deceiving. We did see that reaction, it's been moving up and consolidating, but we really haven't been able to make it up into a new bull trend, be it a corrective bull trend, and it's still a negative at the moment. So although we have to confirm the exaggerations we saw last week, we haven't seen the price action that would really confirm that we could move up. So at the moment, 3 bears, so I'd still be on the very conservative side on euro dollar. And so although we're quite exaggeration on the medium to short term, we're still in a downtrend.
And let's look to gold. How's that looking at the minute?
So gold is an interesting one because you see a lot of diversity in our targets over the 3 investment horizons. So our weekly charts, if you look here, are still in a downtrend. Our daily charts are heading up, and our hourly charts are in a downtrend again. And our automatic interpretation kind of summarizes the situation. We're in a potential resume downtrend, the consolidation here, in a pullback period, it says a bull trend here, and a pullback period which is positioned in a long-term downtrend. Now if we look at this long-term downtrend, we do see signs of exaggerations. That means that the risk index is in the oversold, turning up, and has been now for the 2nd time in the oversold zone. The envelopes are touching each other and are slightly flattening. And if we look at this downtrend, just to remind you, we've been negative on it for about the better part of 2 years here. And so it's been a trend that we really enjoyed see move down because our trend analysis was quite accurate on it. Now, at some point, and let's go back to what we have today, we're going to have a reversal. Now, if we look purely at the weekly chart here, the correction that we see at the moment is not strong enough yet to turn that long-term downtrend. And by definition, we should still have the possibility to move lower over the next few quarters. The targets we have are between 1195 and 984. If we take an average, it's slightly below 1100. So at the moment, given the configuration, our trend indicator is still negative, so we would still have the possibility over the next few quarters to move back below 1200 and possibly down to 1100. Now, now on the medium term, on the daily, we're in an intermediate correction up. And this correction up has turned impulsive. It made it above our gray corrective targets about 3 weeks ago and is now heading higher towards 1328 to 1386. Last week when we were here, we thought the move had gone quite quickly. We expected a pullback down to the support zone that we had seen around 1250, which had already acted as resistance back in October and as a support back in June. And that's initially what happened. But in essence, we believe the trend is still up. The risk index is not overbought yet, and our targets are pointing to higher levels over the next few months. Now, if we look at the daily, we could picture this consolidation, and the prices actually came down and came right into our target zone and then started to react up. Now the question is, can we now initiate or continue this uptrend, or are we going to come back and retest this corrective zone again? And this is how we would use our targets here, our corrective targets, that as long as we stay above them, that means 1246.79, we would still confirm the uptrend on the daily. So in a correction down on the hourly, at the moment we've seen a nice reaction from the zone. We might retest it over the week, but as long as we stay corrective down, we're not in an impulse yet. And so the scenario is that within a long-term downtrend, we're heading up above 1300 again on the daily.
So let's take a quick look at equities. What can you show me? Okay,
well, let's have a look at the mosaic, and we're going to the S&P. And last week we did see a resume uptrend on the hourlies, but it is quite a treacherous consolidation at the moment. And although our weekly charts are still heading up on a impulsive 2 target, so that's quite tentative, aggressive targets for a very extended move, and they could lead us up to 2200, up to 2400 over the next few quarters. We do see quite a lot of signs of exaggeration. Our envelopes are touching each other here, and our risk index is in the overbought and slightly reversing. In that context, we're seeing a consolidation down on the daily. It's only a consolidation, and it should find some support down in this level here between 1930 to 1988. And that's over the next few weeks to meet this gray oval here. What would be a strong signal against the prevailing weekly trend is that if we were to move below the 1930, that would mean that we would move impulsive down on the daily, and that would cast out over the whole uptrend that we've seen over the last few years. That's not the case yet, and so we're only in a correction down, and we think it could still last a few more weeks. That is confirmed also on the hourly. We're in a downtrend. Impulsive down leads us to pretty much the same levels, 1930 to 1967. So we like the fact that the targets here are coordinated over the 2 frequencies, and so we would continue this consolidation down over the next week or so, down into between 1930 and 1967. Then we would expect the long-term trend to resume up. Just want to have a quick look also today at Euro Swiss and Dollar Swiss. As you can see, with the S&B intervention, we had a huge drop 3 weeks back. The Swiss franc is weakening quite rapidly since. There are rumors in the market talking about a new hidden floor between 105 and 110, and it seems like there is intervention in the market on the part of the S&B. Now, to give a bit of sense of what we're waiting here is that at the moment we would still be in a downtrend on the weeklies, still be in a downtrend on the dailies on the Euro Swiss, and the consolidation up at the moment on the hourlies is only a consolidation up. We would give more credence to these rumors if we were able to make it above 107, which is our corrective targets here. As long as we stay below them, but we've gone a long way already, we would favor the longer term trends on the weekly and the medium-term trend on the daily.
Fantastic. As always, it's been great speaking with you, Jean-Francois.
Thank you.
Well, that's all from Jean-Francois and myself for now. Thanks for tuning in, and remember to keep clicking back. Bye for now.